In this video, I want to talk about my two favorite ETFs that I keep coming back to every single week for safe, consistent, and premium rich income selling put options. I'll explain exactly why they're my to go choices, how I approach selling puts on them, and some key risks and considerations you should be aware of. Let's go. Hi, my name's Gotham, and on this channel, I talk about the stock market and achieving financial freedom with the power of options trading. So if you enjoy content that can help you retire early and achieve financial freedom, don't forget to hit that like button, subscribe to my channel, and share this video with your friends and family. Also, if you're new to the options world and are simply looking for one-on-one guidance to help you shortcut years of trial and error and avoid costly mistakes, click on the coaching link below and I'll be honored to help you out. My first pick is ticker symbol NVDL. Now, NVDL is a leveraged ETF that aims to provide 2x exposure to the daily movement of the Nvidia stock. Since it's a leveraged product, it seeks to magnify both the gains and the losses by 2x. So keep that in mind when trading this ETF. Another thing to keep in mind while trading leveraged ETFs is that they are reset daily, which means that their value can differ from the value of the underlying over the long run. So I like to trade them for weekly income and try to get out of them by the end of each week once they hit my profit. Next, let's see how NVDL lines up against Nvidia and see how much premium we can collect selling puts on NVDL compared to Nvidia. I have the Nvidia options chain pulled up right here on Thinkorswim. And since I'm recording this video on a Tuesday, the premiums that we're going to see are not going to be reflective of the whole week. So just to keep it simple and have a fair comparison, we're going to look at how much premium we could collect if I go out to the September 19th options chain. Now, this is about 31 days out. And if we go with a 21 delta right here, a 21 delta is actually going to end up giving you about $3.10, which if you multiply it by 100, because one options contract lets you control 100 shares, that's about $310 by selling one put of the 160 strike price. To sell one put of the 160 strike price would require you to put up a collateral of $16,000. So that would yield a monthly return of almost 1.96, or if you want to round it up for convenience, almost 2%. And Nvidia is currently trading around 177. So that's basically giving you a discount of about $16. And then again, for taking on that risk, you collect now is $3.05, or basically $305. Now let's compare that with NVDL. So if I pull up NVDL, again, I mentioned previously that I like to sell put options on leverage ETFs weekly. But again, for the sake of comparison and just to keep it consistent, and the fact that I'm recording this on a Tuesday, I'm just going to go out 31 days to the same options chain. And if we look at a similar delta that we did on NVIDIA, I'm going to look at a 21 delta right here. And a 21 delta on NVDL gives us pretty much the same premium, which is $305 for selling one put option. And since NVDL is priced lower compared to NVIDIA, to sell one put option on NVDL with a similar delta compared to NVIDIA, it would cost you $7,200, which is the 72 strike price, compared to $16,000 that you would have to put up selling one put on NVIDIA. If you see right here, collecting the 305 on the 72 strike price going about 31 days is actually a return of 4.65% compared to a return of only 2% selling put options on NVIDIA. So if we summarize, not only is selling puts on NVDL more lucrative compared to NVIDIA, if you have a small account or are just getting started, it would only require $7,200 versus putting up $16,000. And NVDL gives you exposure to the daily movement of Nvidia, which is a solid stock. And you also collect more than twice the premium, putting up half the amount that you would require to sell puts on Nvidia, which is why this is one of my favorite ETFs to sell puts on every single week for weekly income. My next pick is ticker symbol TQQQ, and TQQQ is also a leveraged ETF that provides you 3x exposure to the daily movement of the NASDAQ 100 index, which is also known as the QQQ. So if you look at the TQQQ prospectus right here, TQQQ is the only ETF that targets 3x the returns of the NASDAQ 100 index, which is QQQ. TQQQ offers you 3x exposure with less cash. Obviously, if you look at the QQQ is currently trading around $570. TQQQ is currently trading around $90. So again, it gives you exposure to the QQQ or the NASDAQ 100 at a fraction of the price. Obviously, as I mentioned earlier, as with any leverage ETFs, the gains and the losses are amplified, and in this case by 3x. So, keep that in mind as you trade this ETF or any leverage ETF. Now, looking at the top 10 holdings, it's heavily focused on the IT sector. And as you can see, about 53% of the holdings are stocks connected to the information technology sector. So the top 10 holdings right here are Nvidia, Microsoft, Apple, Amazon, Broadcom, Meta, Netflix, Tesla, Costco, and Alphabet, which is Google. So you get access to trade on all these fantastic companies at just about $90 a share compared to QQQ, which is currently trading around $570 right now. Since we already looked at Nvidia, for comparison's sake, I'm going to pull up one individual stock, which is Microsoft. And if I go out 31 days out on Microsoft with the September 19th options chain, and let's say that we go with the 19 delta, a 19 delta is currently offering a premium of $360. And for this, since it's the 485 strike price, I would have to put up a collateral of $48,500 to collect $360 in premium. The monthly return on this is not so great. It's only about 0.76%. So I generally like to target a monthly return of at least a minimum of 2% and ideally 3% or higher. So again, this is looking not so great. So if you pull up TQQQ and also go out 31 days and look for a similar delta, like a 19 or a 20 delta. And so we don't have a 19, we have a 20 delta. So if I look at a 20 delta, now this is the $78 strike price. And basically going with the $78 strike price, you would have to put up a collateral of $7,800. And for this, you would collect a premium of $1.84, which is basically $184 once I multiply it by 100. So if you look at the return here, compared to Microsoft, obviously that was just one of the stocks in the QQQ index. The premiums are going to vary based on the stock that you could pick. But just for simplicity's sake, I just wanted to show you how that lines up to TQQQ. And again, this gives us a return of 2.5% compared with just a 1% return. A return of 2.5% is obviously much better compared to how much we would have to put up to sell 1 put on Nvidia or Microsoft. This only requires a fraction of that collateral. We're only putting up $7,800 to sell 1 put on TQQQ, and that gives you exposure to all the Mag 7 stocks and a bunch of other great stocks. Your investment is diversified because it's tracking not just one single stock, but a bunch of stocks, including the Mag 7. Now, I do want to mention one thing, that selling options weekly are going to be more lucrative than selling monthly options, which is why I like selling my options weekly. If I were to go back to the TQQQ options chain, and that is expiring this Friday, August 22nd, again, that's not giving you the full week, but even looking at what it's providing us right now, going with the 20 delta, we're receiving $58 by putting up $8,500 in collateral. And as you can see, that rate of return is about 0.70%. Now, if I times that by 4 weeks, that would actually yield a return of 2.8% versus, we were looking at the monthly option, which was actually yielding a return of 2.5%. Again, it depends on your schedule and what works best for you, but I just wanted to show you the comparison and why TQQQ is one of my favorite ETFs to sell put options on for weekly income. So that's it for this video. If you enjoyed it or learned anything useful, don't forget to hit that like button, subscribe to my channel, and comment down below with your thoughts or questions. If you would like one-on-one coaching directly with me, click on the first link in the description below, and I'd love to help you out.